Hey guys, welcome to Easy Learning Economics. I'm Dr. Kaval. Today we are having a lecture on balance of payments. Balance of payment is the record of economic transactions between residents of one country and rest of the world. Balance of payment shows the flow of goods, services, financial assets and transfer payments. Double entry of several individual accounts are maintained. Major account of balance of payment are the current account. This is the major account of balance of payment, capital account and financial account. A current account balance is sum up of the merchandise trade balance, service trade balance, trade balance, income balance and transfer balance. It is the major account of balance of payment showing money flow against goods, services, income and transfer payments. What is merchandise trade balance? It shows the flow of visible items, means goods, when the value of export of goods exceeds over the value of import of goods. The merchandise trade balance is said to be in surplus. And in other case, when the import value of goods exceeds against the value of export goods, the merchandise trade balance is said to be in deficit. Service trade balance, this is also a component of current account balance. It shows the flow of invisible item, means services. It includes the transport, consultancy, tourism, etc. The service trade balance, like merchandise trade balance, could be in the deficit or in surplus when the value of export of services exceeds over the value of import of services. The service trade balance is held in surplus, and in other case, when the amount of inflow of services is higher than the value of outflow of services, balance remain in deficit. What is income balance? Income balance shows the net factory income earned from abroad. It means the income earned by the domestic people from abroad, from foreigners or investment made in abroad, minus the income earned by the foreigners in the domestic economy. When income earned by the domestic people is greater than income earned by foreigner in the domestic economy, the surplus income balance is recorded. If income earned by the foreigners in domestic economy exceeds the income earned by the domestic people from abroad, the income balance is said to be in deficit. Transfer balance. The transfer balance account is said to be in deficit when the gifts and aids to a foreign country outflow is more than inflow of foreign gifts and aids to domestic economy and vice versa. It means the current account balance includes all transactions involved in currently produced goods, services, net income and net transfer payments. The second account of balance of payment is capital account. The capital account balance consists of the two main items, that are the capital transfers and net acquisition or the disposal of assets. The capital transfer balance shows the debt forgiveness, means the amount of financial liability that has been cancelled by the creditor, and the migrant transfer net wealth. Net acquisition or disposal of assets. This portion of the capital account shows the flow of non-produce goods or non-financial assets like copyright, patents, franchise income, etc. The capital account balance is the sum up of the net capital transfer balance and the net acquisition of the asset balance. So the other major account of the balance of payment is the financial account. The financial account balance consists of the direct investments, portfolio investments, other investments and the reserve assets. Now, what is direct investment? The direct investment means foreigner purchase of at least 10% share in the domestic enterprises or companies. What is portfolio investment? The portfolio investment means the foreign purchase of domestic financial assets, securities, government bonds and treasury bills. The other investments are the purchase of the foreign currencies, shares, account receivable. The reserve assets account is the total of all reserve including euros, gold and other major currencies like SDR, the special drawing rights that shift among the central banks to settle international transactions. Net error and omission account. To make the balance of payment account become balanced, the net error and omission account is created to offset the excess of all other accounts by an equivalent debit in the error and omission account. This is the format of balance of payment. You can see here balance of payment consists of the current account, and the current account is the sum up of the merchandise balance, service balance, trade balance, income balance and transfer balance. And you can see this is the merchandise balance, that is a negative amount, that is $8,950 million. The value of import exceeds over the value of export, and service balance is also in negative, that is $1,294 million. The sum of the merchandise balance and the service balance, it becomes the trade balance, that is the $10,244 million, and the income balance is also in negative, that is 16,348, whereas the transfer balance is $54 million, that is positive. And by summing up all these things, we get balance on current account finally is $26,538 million. Current account balance is in deficit. The other account, this is the capital account. Capital account means the capital transfer, the debt forgiveness. Net migrant inflow is $934 million, whereas the net acquisition or disposal of assets is minus $80 million. So the balance on capital account is $854 million. So the current account balance must be in balance with the capital account and financial account balance. So here is the financial account balance, that include the direct investment of $8,876 million, and portfolio investment is $7,924 million, and other investment is showing the $11,242 million, whereas the reserve assets, that is in deficit, that is $2,420 million, and after solving it, that the balance on financial account $25,622 million. So the balance on capital and financial account aggregate balance is $26,476 million, whereas the total balance on current account is $26,538 million. The balance on the capital and financial account is $26,476 million. Net error and omission account is created to offset the other balances. The balance on current account and the balance on capital and financial account are in balance. It is all about the balance of payment and their accounts. I hope that it has improved your knowledge. If you like and subscribe my channel, we shall meet soon. Thank you for watching.